Hi everyone, a massive welcome to today's Monday market update. If you watch the teaser, you know we're going to look at some on-chain data, we're going to look at a key level, and we're also going to overlay the previous bear market just to give us a bit more insight about how long this could last. Even with the current macroeconomic conditions being so poor, we can still look at TA to maybe give us a guide and then form a larger thesis for how we move forward. So let's crack straight in. I want to start on the Bitcoin chart as always. So we're looking here at Bitcoin, just a real quick run through of just where we sit. So right now we're below a key horizontal support. So this is a very big volume band here. You can see by these horizontals on the right-hand side. Let's drag that across. These right-hand side horizontals, meaning that there are a lot of buys and sells coming in these areas. So whenever Bitcoin is around 21,000 down to about 19,000, the market, or down to 18,000 rather, the market is getting hit by sells and buys. Obviously, to push the price down is being hit by sells, and then buyers are also coming to the party and accumulating pretty hard. So that's kind of the dynamic we're seeing. We're seeing a lot of smaller wallets begin to accumulate large amounts of Bitcoin. And I think this is what we're maybe seeing in the dollar cost average army, I'm going to name them, because it's a lot of small buys. So a lot of wallets holding under 1 Bitcoin currently, the data shows that's currently going parabolic. And then the next cohort up, that's going parabolic as well. Where we're not seeing accumulation get really out of control is those larger wallets. So the 1K, the 10K wallets, they're, I don't want to say plateauing, they're still going up, but they're not going up at the rate that we are seeing smaller wallets. So right now, price seems to be being held up by these smaller wallet cohorts. So that is a super interesting data point. But looking at the TA just now, we can see that bulls are gaining strength. So on the RSI, you can see here this serious low. Now, I will point out that this low down here was at 17,000 on this chart, 17,600, 500, 800. I mean, it was different on a few different exchanges, but the momentum, or the RSI rather, was at its lowest point ever on the weekly and the monthly. So that tells you something. We are at an extreme point in the market. And in my opinion, it points to a overreaction to one side. When you generally see overreaction and enormous volumes come in, that generally marks a capitulation. Now, I'm not saying that that is the end, that's the bottom, but historically, that's when we see those serious capitulations, max panic, max fear, enormous volume. So that means that Bitcoin's being traded hands. So more volume means generally that capitulation. So if we're looking here in this shorter term time frame, though, Bitcoin is really trying to make the higher low from this low. So you see here, that was that low, 17,800 give or take. And now we're up here. We moved up, had a nice little rally there, broke down from this. You can see a wedge there very clearly. Just paint that for you so you can see. Bitcoin broke down. So classic bearish pattern there, broke back down, lost support again, back down here. But what is important here is this low area here is higher than the last. That doesn't mean we can't break down again here. We're just following this trend. But Bitcoin has a chance here to get back above these volume areas. And it needs to get back above 20,000 first of all. That is a key psychological point. And then we can start to look at where we really, really need to go. So where Bitcoin absolutely has to head next is this level here. And we've been talking about it for quite a few weeks. Get rid of some lines there. It's the 200 weekly moving average. So this red line here goes back to all previous bull markets. It's generally been the floor for all previous bull markets. So the price gravitates back towards that level. If we just scoot back over here, disregard these little bubbles. So this red line here, previous bear market, bang, hit it on the nose. Previous bear market before that, rolled all the way back, bang, hit it on the nose. Went below a little bit. This is the thing as well. We don't want Bitcoin to stay underneath it for too long. It went under in COVID, next candle it rallied above. So this weekly candle is fairly significant, which has just closed. We really don't want to spend another weekly candle beneath this line, in my opinion, because the longer we stay beneath this super contextual long-term moving average, the heavier the chance is that we go lower. Now, what I just want to change is we'll go down to the next major long-term moving average. Just gives you a picture of where the next major support is. So this would be the 300 weekly moving average, the 400 weekly moving average. So that means these lines represent the average of, say, 300 of these weekly candles together. So that's that average price. And the 400 is 400 of those weekly candles averaged out together. That line it points to that price. So these are super key levels. And right now we've lost the 200. So next is this next one about 16,800. That wouldn't be the end of the world. It's a little bit lower than what we got previously. The market's going to bottom somewhere. We just don't know where it will just yet. But so far, you know, with this candle here has closed again beneath 20,000. So we've just opened here. This one here closed beneath, wick down, got bought up. And right now we want this candle to rally pretty significantly 20,000. I don't know if it's going to do that just in these conditions. I wouldn't be surprised us to just bounce along in here for a little while, you know, something like that. But more so sideways than anything. I can't really see a major rally in these markets unless the macro conditions change. But these are the points that you can have a look at to see where we might go next. So 16,000, 12,000, the next big one. I think 15,000 you can throw in there as well. But, you know, if we lose this level, we go to this level. That's how you can look at it. But there will be buying strength coming in around those points. All right, apart from markets above this level, I wanted to overlay what happened in 2018, 19 in that bear market, and just give you an idea of, you know, what we're looking for. So genuinely, this is what happened in 2018, if we're just overlapping. Now, it's not going to rhyme exactly, but it gives you a guidepost. So, you know, the market went sideways, ground down, finally had the capitulation, so these blue candles. And it's fairly similar to what we see here, except this phase up here went a little bit more sideways. This viciousness here, though, could be attributed to the whole Celsius 3 Arrows Capital. A lot of prime brokerages went bust. So it added to that aggressiveness of that sell-off. But you can see here it's not that dissimilar. And here we could absolutely go lower to that 16,800. In fact, I probably think that's quite likely at this stage. But I just want to point out how bottoms generally work out. So major macro bottoms, so extremes in those price actions. 69,000, where do we bottom down below? It's probably going to be lower than you think. And it's probably going to reverse quicker than you think as well. However, just in history, we have seen that these bottoms take a while to work out. It's going to take months. It's going to take many weeks of sideways, boring, chopped sideways action. But what this points to is we are in prime accumulation area. Once we see the signals that say, let's say 17,000, that buyers keep stepping in, sellers cannot push any further, then, you know, these areas are just those generational bottoms that you are looking to go a bit heavy in your dollar cost average. Right now, you know, this volume's holding it up. It will see. It would be a little bit scary again if we see it drop down. But again, you need to flip the mindset and look at all this as an opportunity, because these trends do not last forever. Okay, let's quickly look at the MVRV Z-score. It's a bit of a mouthful, but essentially what it tracks is Bitcoin's average price over time, and when we are at extreme deviations from the mean. And that really helps us glean that clear picture of, again, when those markets are at those extreme overreaction points. Generally, those are the points of maximum financial opportunity for investors. You know, you can invest in between in no man's land, but generally the maximum money you're going to make is either selling it when we're at the top extreme and buying when we're at the bottom extreme. So, you know, fairly simple stuff, but it is incredibly difficult to maintain that discipline and action that strategy if you are a macro investor, if you're looking at those real long-term sort of plays. And right now, have a look where Bitcoin is on the MVRV score. So this is the ratio down below. Last time we were in this area here where we are at the moment, we were at the very bottom of the bear market. Absolute scope to go a little bit lower, but overall, forget about catching the exact bottom, forget about catching a falling knife. We're in the area. We are in the accumulation area where you do realize those maximum gains for the next cycle. So, you know, DCA is your best friend here, dollar cost average, just to expand on that. But previous bears clearly are in this area, So if we say stop here and begin to reverse, and a lot of these on-chain data signals are all screaming that we are at the extremes, extreme lows of these points. Some are even at record lows. So when we begin to see them all begin to just slowly curve up and reverse, then we know we're beginning to get out of it. Then you look at your long-term moving averages as well to give you a bit more confidence. But overall, this is looking fairly positive that we are fairly close to the bottom. Again, it doesn't mean we're there, but it means we're in the area. And I think that is all that matters. All right, just ducking over to Ethereum, fairly similar chart. I think we mentioned last week that Ethereum looked like it was going to break down in our altcoin Bible from that ascending wedge. So same as Bitcoin, had that breakdown. But overall, it's actually looking fairly positive. You can see there that Ethereum is trying to make that higher low pulse up. Gets above this 21 moving average, gets on top of it as support, and also gets on top of this volume bar at around 1,200, give or take. Then we can start to see Ethereum begin to make a move higher. So that 1,700 is definitely on the cards, but I'd say 1,500 at the 50 moving average is absolutely there. Bull's gaining strength too, slowly but surely. These trends do change. I just feel we need to be cautious, though, buying into or getting sucked in with the thought that everything's over. I just want to again reinforce the point that I was just saying with Bitcoin. This thing could go sideways for many months to come, and if you're buying into green candles, invariably there's going to be a lot of sellers that come in when we are testing these points of resistance again. So we still say we pulse up to the 50. I'd say sellers come in quite hard. We come back down. We want to retest some of these areas of support. It's going to be a stepping stone higher. So if you imagine steps higher, and it's always elevated down. In bear markets, it's very, very difficult to time these things. So don't just dollar cost average slowly. If you like Ethereum here, dollar cost average, have your levels set lower. You can see here I've got them on the chart. So that's basically what I want to get across. So just be patient. The market, let it come to you. That's the biggest takeaway for me. All right, guys, I hope you've enjoyed this Monday market update. I wish you all the best. We'll see you on Wednesday for our altcoin Bible. Bye.